Tesla stock investors, we need to talk. As I said in the video yesterday, I think Tesla is going to go higher this week. That's because I believe CPI coming out tomorrow is going to come in light. We're getting some signs of this, including some massive deflation in China, like huge deflation, which is very problematic. I don't think our situation is going to get that bad, but at the very least, it's probably going to support a lower CPI report. I also think the Fed is going to come roughly in alignment with the markets. We'll touch on that here briefly in this video, but there is a lot of rumors, just flat out rumors today. Why Tesla stock is declining about 2%. A lot of people did not expect this. But there's really a dynamic that's going on under the surface here. This Alex Jones situation, it's not affecting Tesla stock at all today. I would actually say Tesla is doing relatively okay, considering Tesla's down about the same as Apple or close to Microsoft today. That's pretty good day for Tesla. So we have a lot to get into. We are going to debunk a lot of rumors and just get into what's going on with Tesla stock today. I hope you guys enjoy this video. I hope you learned something from it. If you know someone that is spreading these false rumors, I mean, Ross Gerber's doing it himself, so I'm sure you guys know some people. Send this video over to them. I think they will learn a lot. I think they will get valuable insight and information out of this video. So let's just go ahead and jump into it. So before we get into all of your Tesla stock news today, let's acknowledge the elephant in the room, something everyone is talking about. Some people are considering selling Tesla stock. Outrageous claims and remarks by some individuals, including, you guessed it, Ross Gerber again, over this Alex Jones situation. Elon Musk basically reinstated his X account. I mean, not to be insensitive to anything Alex Jones has did, but doesn't mean anything for Tesla stock. Like literally nothing. Nobody's going to choose to buy a Tesla or not in large numbers based on Elon reinstating Alex Jones, right? It's ridiculous. You're grabbing at straws at this point. Well, Ross Gerber says, getting messages again. Elon and Alex Jones figuring out more ways to talk people out of buying a Tesla. He's a very emotional person. I would be very scared if he was managing my money. But really, I'll just save you the cinematics here. This has no effect on your investment in Tesla stock, and it's not causing Tesla to drop today. It's a little bit more complicated than that. See, this week is by far the most important week for stocks that we have had throughout all of 2023, because for the majority of 2023, markets have kind of been in alignment with the Fed. This was unlike 2022. 2022 was such a brutal year because the Fed went from saying they're going to raise rates 3 times at the start of 2022, and they ended up raising rates like 10 plus times, going from basically 0% to 5+%. That was a problem. Markets and the Fed were not in alignment. In 2023, we have been. Now, we're at an interesting point in time where markets are expecting 4 rate cuts in 2024. The Fed's last projections in September were 2 rate cuts, or just maybe 1 rate cut, in between 1 and 2 rate cuts in 2024. If the Fed does not confirm we might get 4 rate cuts, then you're going to have a bit of a problem. So there's going to be a lot of volatility around Wednesday. Even tomorrow with the CPI report, that's going to be very volatile as well. So what you're seeing today is the VIX is up about 2.5%. The broader indexes, at least for interest rate sensitive names, the names that are going to see the most volatility, they're basically flat on the day today. The Russell 2000 is up 0.13%. The NASDAQ is up about 0.1%, whereas your Dow and your S&P are up about 1/3 of 1%. Your Dow's almost up 1/2 of 1%. So some money is going from interest rate sensitive names into more of your industrials, more your stable companies in the Dow 30, as just reference here, right? McDonald's, Home Depot, names of or companies of that nature, those are the ones that are actually seeing the money today. Because let's say the Fed is not in alignment with the markets. Well, you might not want to be in interest rate sensitive names if you're a big money investor. At the very least, if things go sideways, being in consumer staples like the Dow companies, well, that would make sense even if all things went sideways. And notably, the VIX up 2.5% today, there are some hedges being placed on our markets. So considering we're going to get a lot of volatility tomorrow as well as Wednesday, you're seeing these hedges placed on the stocks that would likely be hurt the most if things went sideways with CPI, but especially the Fed. And it's not just Tesla. Tesla's down about 2%. Microsoft is down 1.13%. Apple is down 1.55% today. I would be a lot more concerned if Tesla was down 2% and Apple and Microsoft were green on the day today. It's broad-based in all of your technology stocks, or a vast majority of your technology stocks. And I don't really think it's a lot of people selling. I think it's just more of hedging and probably some large hedges that are being placed on stocks like Tesla today. Option activity on the day today for Tesla is pretty good. Positive order value of 58%. These numbers are going to finalize by the end of the trading day today. It's probably going to be not such a great day for option activity when all things are said and done. Now, we have seen 528 orders totaling $178 million. So we are seeing a low dollar amount as of right now. But again, that video coming out later tonight, you're going to get a more updated picture of what the option activity did look like today. If you take a look at the open interest on the call side, that is 46.75%. Open interest on the put side of 53.25%. So if you're looking at just the amount of calls and puts for this Friday, well, there's more puts than there are calls. But again, considering options are mainly used as a tool to hedge larger positions, it's not also too surprising you have more puts this week considering the extreme volatility that we are going to see. We do have some relatively good news as well today. China's CPI report that actually came out last night was rough. The Chinese stock market sold off over 2% across the board last night and in the early morning hours today. This article from Reuters says China's consumer prices fall fastest in 3 years. Factory gate deflation deepens. Here you can see November CPI year over year came in at negative 0.5%. Last month, you were at negative 0.2%. November CPI month over month came in at negative 0.5%. You were at negative 0.1% just last month. PPI year over year came in at negative 3%. Last month, you were at negative 2.6%. So across the board, it looks like China is experiencing quite a deflationary spell. This is obviously bad for their economy. It's not great in that regard, but it's a good sign that tomorrow's CPI report for the US could be more good than bad. Nick Timiraos wrote on X within the last 12 hours ago, he says Fed officials aren't likely to have a serious conversation about cuts this week, but the prospect of lower rates is coming into view. Quote, there are plenty of things that could cause them to say, we're not in a rush to do this. So a little bit of conflicting information we're getting from Nick Timiraos here. He is seen widely as the Fed's mouthpiece that likes to communicate to the Fed, help do the Fed's job of communicating to the markets. He's saying on one hand, there's probably not going to be discussion of lowering rates, but lower rates are probably going to have some place of conversation. It's not going to be a serious one, but there will likely be some conversations on that. But they might not be in a rush to necessarily start cutting rates. And I think we all know that. I think that's clear. The markets are pricing in between 4 and 5 rate cuts in 2024. This could put the Fed funds rate in between about 4% or 4.5%. Anywhere in that range on the dot plot coming Wednesday is going to be great. By the dot plot, that is this. The projected federal funds rate by the end of 2024. In September, the Fed was at 5.1%. If you drop to 4.5%, 4.25%, that would be great news. But nobody's really expecting cuts right around the corner necessarily. The first rate cut is priced in for May 1st, 2024. So that's technically Q2. Goldman Sachs says, quote, recent inflation data has been an encouraging surprise even to our optimistic expectations, and our forecast path for year-on-year core PCE inflation has fallen somewhat as a result. We are therefore pulling our forecast of the first rate cut forward to Q3 of 2024. So even Goldman doesn't think the first rate cut is coming in Q2. They think it's going to be some point after June. Let's now get into all of your Tesla stock news that you need to know on the day today. Here's a win for Tesla. Germany's trade union IG Metall turned down the Swedish union IF Metall's call to action against Tesla. This is not necessarily Tesla specific news, but it says the Boring Company has finalized the purchase of a 1.4 acre site in the Chinatown/Asian district in Las Vegas. The site will be home to a new station on the expanded Vegas loop. Tesla Europe and their Middle East X account is really appealing to the pet owners out there. They write, don't tell your dog, but dog mode works for cats too, or any other pet. The first EV charging station funded by a $7.5 billion US government program has begun operating in Ohio, the White House said on Monday. This is interesting. Here are changes in appraised value of Elon Musk's company properties in Texas alone. The appraisal at purchase for Tesla's property in Texas, over 2,000 acres, was $346.9 million. That's this yellow bar you can see here. Now the property is appraised at $2.3 billion. SpaceX was valued at $127.1 million at the time of purchase. Now it's worth $238.9 million. All in all, Elon's properties in Texas are now worth over $2.5 billion. Ouch! Lucid Motors will be removed from the NASDAQ 100 at the end of this week. Apparently, some Foundation Series Cybertruck buyers have been told to prepare for delivery. Graham Stephan is writing Elon Musk on X and says, can you make it so we can use referral credits towards a discount on a new Tesla? This is an interesting concept that I'm sure will happen at some point, but is not currently available. We now have new market share percentages for different countries for the month of November. As you can see, by far the highest is Iceland. Number 2 is Norway. Iceland is 37.3%. Almost all the vehicles on Iceland roads are going to be basically Teslas, almost half of them. That's an astronomically high number. Norway, 16.3%. Ireland, 16.2%. Denmark at 14.8%. Hong Kong at 13.3%. Portugal at 9.2%. Netherlands at 7.5%. And then you get other names like China at 3.1%. Poland at 5.5%. France at 6.1%. Germany's at 2.0%. The UK is at 1.1%. So Germany and the UK definitely could see lots of market share growth over the coming quarters, especially as the Model 3 Highland is now really starting to ramp up production. Rumors are growing that FSD beta will begin in China as early as the end of this month. Now, what's actually interesting about this is just how big this could be, right? About 10% roughly, we estimate, new Teslas in the US, people purchase full self-driving. Well, the US is by far Tesla's most important single market, at least throughout time it has been so far. Well, this quarter, we could actually see China become the #1 market for Tesla. Some people are estimating by 5 to 10,000 deliveries. If FSD enters into the Chinese market, this will be massive for Tesla and ultimately to the bottom line into that margin number. I plan on going over this more in depth in the video coming out later tonight, so stay tuned to the channel for that one. But I did want to let you guys know about this news here in this video as well. Tesla currently boasts a short position of $21.91 billion, by far the most heavily shorted stock in our markets. So if CPI is good tomorrow, if the Fed is good tomorrow, and if these catalysts are bullish ones for our markets, then I think you could open up the floodgates for billions of dollars to head into interest rate sensitive names. It's one thing to have the markets price in 4 or 5 rate cuts. It's another thing for the Fed to tell you they're expecting to cut rates 4 or 5 times and to avoid a recession. Big money, well, they're going to react based on what the Fed says, not what the markets price in. So I think we could be in the very early innings of a much larger rally, and some of this almost 22 billion worth of short positions, well, a lot of that's at risk of getting squeezed to the upside if this week does go according to plan, or at least my estimates. The latest AI investor sentiment survey that has recently came out shows the bulls are pretty much the same at about 47.3%. Neutral investors did drop to 25.3%. The bears increased from 19.6% to 27.4%. So you've seen a big jump here with the bears recently. That's actually a good sign heading into the rest of this week. You don't want to be ultra bullish heading into big catalysts. You want to be neutral or even bearish heading into big catalysts. That really makes for an upside move a lot more likely. Global inventory numbers for the Model Y, for the Model 3, for the Model S, and the Model X are all falling today, and they have been over the past couple of days. This could either mean lower production or higher demand. I imagine probably higher demand. We haven't seen any slowdown in production. If anything, we've seen the most vehicles ever getting shipped out of Giga Shanghai. One of the reasons why some people are starting to believe China could actually give us more deliveries than the US for the first quarter in Tesla's history. So this, I would say, is probably a good sign around demand for Teslas. And Q4 tends to be the best quarter for Tesla almost every single year. So that would make sense. Google trend activity for the Cybertruck remains very elevated, right at about 89. Now, this data is incomplete, so we don't know exactly as of right now, but the Cybertruck has been at 100 or around 90 since November 26th. So that is a couple of weeks now. You're not seeing huge search increases to the Model 3 or the Model Y as of right now, more so just baselined, just kind of going sideways here. The percentage of stocks above their 50-day moving average is declining about 0.69%, down to 73.74%. Still pretty elevated, still roughly the same levels that we seen during the summer AI rally, but seeing a little bit of a relaxation today in this chart is better news than not. Tesla stock is currently down about 1.55%. Just a quick little update here. Apple is down 1.53%. Microsoft down 1.26%. So Tesla is right in line with your other big tech names. 10-year Treasury yields pretty flat here on the day today. Really, that's kind of what I would expect before major catalysts coming out over the coming days. Now, a quick look, TLT is down 0.36% today. That's not exactly great, showing the 20 and the 30-year treasuries. Their yields are likely going higher at least a little bit today. USO is up 0.29%, likely reflecting a stronger economy than what a lot of people expected. That's at least what the data has said over the last couple of days and weeks. If you look at the dollar, we track this using the DXY. That is basically flat on the day today. Gold is down about 1%. I would say that is great because gold is really a fear gauge more than anything else. As you can see today, Tesla stock is holding a lot of support around $240 per share. That is great. We also seen a lot of resistance around the 100-day moving average. So today you're in a pretty tight range. You did hit a low today of about $237 and some change. This actually coincidentally enough coincides exactly with this line that I have drawn here on the chart today. So all in all, this does look pretty good. Another bit of good technicals, if you will, is the RSI. The RSI, the relative strength index, is at 53.81. So it's not going to be very hard from here to get an upside move. There's not a lot of resistance, if you will, for an upside move given the right conditions. Tesla stock has risen a lot from 194 recently back in the beginning of November to where we are now at 240. That's a $50 per share move higher. That's a substantial move higher for even Tesla in a relatively short amount of time. And the RSI being neutral, anything around 50 is neutral, that is great. I mean, that's exactly where you would want to see Tesla's RSI. So that is good. Your MACD is also positive. Your yellow line is above the blue line. So also that looks pretty good as well. Let me know what you guys think about all of this information down below in the comments section. What's your estimate for the rest of this week? The data coming out tomorrow with CPI as well as the Fed on Wednesday. Hit that like button and subscribe to the channel if you guys made it to the end of this video. If you guys want to take it a step further and come talk to us, come trade with us live in real time. Every time I make a trade, I send out alerts for better or for worse. Lately, it's been pretty good, but we'll see. We do have a trade on small caps right now, betting that they continue higher from here. I do think they are substantially undervalued if the Fed does reconfirm what the markets are currently pricing in. And I think that's probably a 65 or 70% chance that does happen. So we do have a trade on IWM, full transparency right now. I think that's the only trade that we have on right now. So you're not missing too much, but things are about to get a lot more volatile from here, and it's going to be a great place to be. So come join us, link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.